Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 6:40 in the a.m. Eastern Standard Time. Starting a little bit early today. So, what's happening today is that we are on the cusp of another Federal Reserve announcement. And this comes on the heels of yet another inflationary data point, which was released yesterday, which was the PPI, which came in a lot hotter than expected. And retail sales declined. So we continue to see week after week after week after week evidence that inflation is not coming. It's here. It is here. And the Federal Reserve, which again is set to announce their decision, they're not raising rates, not cutting rates. They're probably going to stay unchanged, and it's going to be all about the forward-looking guidance. It's going to be all about the press conference soon to follow, which is like watching paint dry, listening to Jay Powell answer these questions and stick to his talking points. So I found this article interesting on Zero Hedge. I'll share it. I'll drop it into the chat box. Why is it not letting me? Unfortunately, I'm not able to share anything. Oh, there it goes. Just popped up. Hey, Tommy. That was weird. Big lag. Okay, so the headline of this article off of Zero Hedge: taper to be discussed, but dismissed quickly. No 2023 hike dots will be seen as dovish. No 2023 hike dots will be seen as dovish. I'm not sure what they're getting to here. I think that if they're waiting until 2023 to have any hike whatsoever, de facto, it's dovish. We're going more than a year without a rate hike. So here's some expectations that they're expecting today. Tapering of asset purchases will likely be discussed given the number of FOMC participants who have raised the issue, but we expect Fed Chair Powell to stress that almost all participants see tapering action as premature. Dovish. And what this is bullish for gold, silver, bears the dollar. Next data point. It is a close call on 2023 hike. In the June projections, on balance, we think the FOMC will wait until 2024 projections are introduced in September and put the first rate hikes in 2024. Are these people nuts? Have they absolutely gone stark raving mad? 2024 to the first rate hike? The 2021 forecast for core inflation is likely to be, is likely to rise, but we expect 2023 inflation unchanged at 2.1%. This goes back to the Fed policy change last year, where Powell went from our goal is to have an average inflation of 2%. A target inflation of 2%, because we were below, according to their data points, we were below the 2% mark. Then they saw inflation coming and they said, okay. We got to change this up here. The story's not good. We don't want to get called out. So they changed their target to an average of 2%. So we can go a lot higher, we can go a lot lower, but net, we got this. We're good. Don't worry. Don't go. Just lock down. Don't worry about it. You're going to get an average of 2.1%. We're averaging between, this is what they admit, 6 and 10% on average on an annualized basis, given the data that we know thus far. And they expect inflation while they're pumping up all this debt to drop back down to an average of 2.1% at the core. Forget about the headline. The core backs out food and energy. It's shocking. It's delusional at best, nefarious at worst. So it looks as though they are going to be quite dovish today. Expect a lot of volatility. I said this at the beginning of the week, given all the economic data, and I think that we've seen that. So buckle up, folks. Let's get to the pre-market activity. Okay, pre-markets. Starting off with the NASDAQ 100. Let's get rid of this. We are seeing the potential for a head and shoulders setup. Now, if yields drop, I don't think that the NASDAQ's going to break. So all I'm doing here is pointing out that we have the potential for a head and shoulders setup. So here's your left shoulder, here's your head, here's your right shoulder forming, here's your upper band of resistance. Change that to green, nice pretty green, Christmas colors, red at the bottom, and we're consolidating along this lower band of support. We are up 0.13% this morning. Taking a look at let's go to the Dow first. The Dow is down slightly. You can see that we put in lower highs here, and we are beginning on a 4-hour time frame to test a breakdown to new lower lows. We had a breakdown here, but we recovered. The real key is a break below this support level here, because this was your W formation that was supposed to set up for a continuation breakout higher. And if that fails, that's really going to crush a lot of confidence in the cyclical names. So let's memorialize that. The S&P 500, for the most part, flat in the session. Very similar setup here. Here's your W formation. It's holding up better than the Dow. And we're simply consolidating. We're in wait and see mode here this morning. I don't expect much activity in advance of the Fed announcement today. But that final hour of trade should be a really interesting period of time. The Russell 2000 4-hour chart. We are seeing the Russell come under some pressure. We had stalled out back here in what was this, March, right? No, February. And we went into this long-term trading range, multi-month, and we began to break out. And the breakout occurred here on the 7th of June, and we had a continuation move up higher, no new highs, but we have dropped back down into a trading range. Broke out yet again, dropped back down. This is not sexy stuff. This is poor price action. You don't want to see breakouts fail. Personally, I do. I have a short position here, so I'd love to see this thing crash. Good morning, Lee. Top of the morning to you. So we're stuck in a wedge formation here with a lot of indecision on the Russell 2000, extremely overbought on a monthly time frame. Taking a look at bond prices this morning. This is why you're seeing the NASDAQ bid and the Dow pull back a little bit, because you're seeing the 10-year Treasury note rally. That means yields are pulling in a little bit. Now we do have resistance above, and we're right at it at current. Now, if we sell off this afternoon on the 10-year Treasury note, that means yields are rising. I would expect to see large cap cyclicals move up higher, and your technology names, including the triple Qs, pull back on rising yields. Because if yields move up higher, that means the market didn't get what it wanted. Segueing over and into currencies for a second. The dollar is down, but it's being bid off the lows. That does not bode well for gold and silver this morning. So, despite the fact that it's so crazy, there's so many mixed signals this week. Despite the fact that the 10-year is moving up higher and yields moving lower, they're also buying the dollar. And I would argue that traders, as they've done multiple times in the past couple of months, when hot inflation data comes out, they buy the dollar and they buy bonds. And usually within 24 hours, that trade is reversed. Will it happen again today? Too early to make that call. But I think that once again, they're going to get it wrong because the Federal Reserve has zero intention at current of combating inflation. And if they, in front of the midterms, the November 2022 elections, if they fail to appease the markets and fail to continue buying up debt, you're going to see this market correct in a very, very big way. And that means 401ks coming to a lot of pressure. Good luck to the Democrats going into 2022. So they can't allow this market to correct heavily. So watch for the dollar. Let's take a look at gold. Gold was up $3.50 the ounce earlier, now only up $1. Weaker price action as the dollar lifts off the lows of the session. Check out silver. Silver up over a half percentage point. A little bit of a fade thus far. RSI is still very weak. We did break out. But we can't break above 50 on get an alert to RSI. On the RSI, still down below 50. Tommy, what do you think on gold, Bob? Can you analyze move? Is it going down? I think we're poised, and keep in mind, I'm positioned along of the gold miners and silver miners and silver. So, you know, that's a bit of transparency on my part, Tommy. What I want to happen is, of course, that I want to see a rally. I think that the case could be made that any pullback on gold right now is a buying opportunity, especially when you take a look at seasonality. It's a seasonally favorable period of time. Now, if we have inflation that's hot, remember that retail sales came out yesterday weak, so you have growth in the economy that is stagnant, yet you have inflation. What is that? Stagflation. It's if you had a petri dish to analyze gold, you would see that it does best in a stagflationary environment, circa mid to late 70s or early 80s. You had that stagflationary Jimmy Carter environment, and gold just went on a tear. Where the markets did okay, they weren't failing. You had some GDP growth, yet inflation was outpacing GDP. So in real terms, the economy wasn't growing. So after these stay-at-home payments end, and the economy begins to slow because the heroin's not being injected anymore, is that not stagflationary? Is not what we have right now stagflationary? I would argue that it is. But as it stands right now, it seems as though the algorithms are programmed to go in when there's inflationary data and to buy the US dollar and to buy bonds in anticipation of the Federal Reserve, or to sell bonds, I should say, in anticipation of the Federal Reserve fighting inflation. And they're not. They're not fighting inflation. They're enabling inflation. They want inflation because they're trying to inflate away our debt. So I think in the short term, traders have it wrong here. And it's been proven over the past several months. CPI, PPI, PCE, each time those data points have been released, the initial knee-jerk reaction was to sell gold and buy dollars. Within 24 hours, that was reversed. So I kind of expect to see the same thing here. Could be wrong, but that's our hypothesis right now. So longer term, bullish on gold. The charts are not validating it at current, but will remain bullish because the debt isn't going anywhere except for higher. What's Bitcoin doing? Bitcoin's still lethargic. Gold is a big liquidity more than Bitcoin, but it's hard to see. Yeah, I think longer term, the payoff on the gold mining stocks in particular are going to do well. What we're doing is, yesterday I sold covered calls on our NUGT trade. So we're generating cash flow off of our positions, but we're still waiting for that big move up higher, and eventually the markets will get it. Nat gas pulling in here a little bit. But the real story on natural gas is the weekly chart. And you can see that last week was a big move up higher. This week we're giving up some real estate, but I think that longer term we're moving up a lot higher. Look at this W formation on nat gas. All right, folks. With that, I'm going to say everybody have a profitable trading day. And stay tuned for that report. I would not front run the report with any trades whatsoever. But until tonight, don't forget, Thursday Night Futures Live, tomorrow night, 6 p.m. Eastern Standard Time. Check us out. And I'll talk to you soon. Have a great day. Be well. Take care, Tommy.